I recently sold my business and now I have a nice chunk of cash in the bank, but I don't have a job any longer. Is there a mortgage available for me?
This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
Yeah, so you run into a problem of if you don't have a stable, reliable source of income, traditional mortgages don't understand that, and they're like, hey, you can't afford to pay the bill. There is a solution for the case where somebody has a bunch of money in the bank, right? But doesn't have a job on a monthly basis. There are asset-based income loans.
Okay.
They're in the traditional, conventional world. There's a product if you're of retirement age, basically you can do that. There are alternative loans that would allow for that young person to sell their business for millions and then get a mortgage. But effectively, we take your assets and calculate a monthly income based upon how much money you have.
So that cash can generate income for me just in and of itself. Is that what you use?
Well, that's part of it, but as well as the ability to draw down that money slowly over time and sort of live off it, right?
Okay.
So we do a calculation that says, okay, will this money last long enough to pay this mortgage and for a number of years and this sort of thing.
Gotcha.
And so, yes, there is a solution there in the traditional world as well as in the alternative loan world.
Following up on that a little bit, would a lender look at the idea that, okay, let's say I have $1 million in the bank and I'm buying a $200,000 home and I'm only like 40 years old and I don't have any other income coming in.
Right.
Will they consider the amount of equity being increased from my side of the equation over time? Do I have to get all the way there is my question. So in other words, it's a $200,000 house and in 10 years it'll be $100,000 worth of debt, but maybe I'll only have so much in the bank. But now there's so much equity there. Is the bank comfortable with that there's a big piece of equity there?
You don't have to, and maybe I'm not landing on this right, but you don't have to have dollar for dollar for the amount you're borrowing.
Okay.
Like, I don't have to have $1 million in the bank if I want to borrow $1 million.
Okay.
That's not the way the math works.
Okay, good.
It's if I divide this $1 million you have into the bank over 20 years and have a sort of treat that as a monthly income, is that enough to pay this and that sort of thing?
Okay.
There are other versions of this that will look at it on the dollar for dollar basis if that's a simpler, easier approach. It really comes down to what's the easiest path for you, as well as where your money is being held.
Right.
If it's in an account that you're not allowed to touch, that's not okay. If it's cash versus is it a retirement account and you're not of retirement age yet, these type of things. There are rules for what types of assets count and how much they count for, but there are solutions there to be worked out. So simply because you sold your business and you're unemployed doesn't mean you're out of the game.
It was interesting, when we were going through that transition of anybody can buy a loan where they can fog a mirror to, oh my goodness, let's look at the history of this person to make sure they can qualify. That a lot of people who had tremendous assets and tremendous balance sheets and for the personal life were upset that they were being scrutinized so much. But this is the reason, is to prevent the idea that you can't afford the home. Ultimately,
certainly the rules were rewritten insofar as like the government entities of defining the rules of what's a safe loan, as well as Wall Street saying, hey, is this a good risk for our money?
Right.
And preventing those losses in the future. What we are seeing now as an industry overall and in a marketplace overall is that some of the major insurance companies in the world are investing their dollars into buying these alternative mortgages.
Really?
In a search for yield, right?
Right.
And the interest rates are good enough for them to say, yeah, we're fine putting this money there for 30 years, knowing it's going to generate this much money potentially.
Interesting.
So that's created a good amount of liquidity coming into the marketplace to have other options than simply what the government's willing to guarantee.
Gotcha. Okay, good. All right, let's go into scenario number 2 here.
Okay.
Okay, I'm a 20-year-old who just inherited a good amount of money from my family. I would like to invest some of it into rental properties, but I don't make a lot of money from my job. Is there a loan available to me? So is there something available for this young man?
Yeah. So this is like this person is saying, and they're not going to live in this property. It's not for their personal use. They want to buy it for rental purposes, let's say, or investment purposes. There is a loan product out there. It's an alternative loan product, which will really focus simply on the cash flow of the property, like what the rent is versus what the mortgage payment's going to be, as a function of saying yes or no on the income side of things. So long as you have the dollars to do the down payment and the willingness to guarantee guarantee the debt, like your credit's good enough, that sort of thing.
Right.
The income side of things can be solved simply by the projected rent for that property.
Oh, good. Okay.
So it doesn't have to be rented right now.
Right.
It's like we'll have an appraiser tell us what would the market rent be for this, and we can use that number to say, will this pay for itself or better?
Brilliant. Right? Okay.
So yeah, there's a good solution there. I'll go one step further and say this is most commonly called a DSCR loan, debt service coverage ratio.
Oh, okay. Wow.
Yeah,
another acronym.
Yeah,
Write that down, Carly.
It's the mortgage business. We're
DSCR. Yeah, you're all about acronyms, aren't you?
Me and the federal government for sure. Yeah.
Okay. So I've heard of this before. So when I know that even when like anyone's buying a rental property, the rent that you're going to collect can count towards your income. Is that true for just about any program? Or
yeah, generally yes, unless you're like a first-time home buyer who doesn't own any other real estate.
Okay.
Their rules are tighter on that because there's actually an issue in our industry where there's a reverse mortgage fraud, what we call reverse occupancy fraud, where a person, let's say, is trying to buy a house for themselves to live in. They don't qualify. They don't make enough income to qualify. So what they do is reverse it and say, I'll buy it as an investment. Then I get credit for the rental income, and now I can suddenly afford it. This is a large area of fraud, and the rules are being tweaked to try to prevent that kind of thing or catch that sort of thing.
Yeah, I never thought of that, but that makes sense. I can see where some deviant minds have been at work.
If they write a rule, somebody's trying to think of a way around it. Yeah.
Always.
That's for sure.
All right, so let's look at scenario number 3
There's
here.
more of these? Okay.
I got a few more for you, John. So this is as a self-employed person, my tax returns don't tell the full story about my finances, and I've run into problems getting a mortgage. Is there a solution that can make life easier to finance a home? So in other words, I have my own business, and maybe my taxes aren't what they should be. I don't know. Maybe my account's really, really good.
Right.
And I have income that's based on whatever calculations he does. Yeah. That's actually more than what the government knows about.
It's super common. Like, there's tax strategy being employed by self-employed businesses or borrowers very frequently.
Perfectly legal.
Nothing. They're minimizing their
shady.
tax obligation, but unfortunately, it in most times has the side effect of reducing your qualified income for a mortgage. And so this is sort of a catch-22: pay less taxes, but get less mortgage.
Right.
So yeah, there is a solution that's come into place. This is once again an alternative like loan. It's not in the core government products, but the alternative loan, there's a bank statement loan where we can look at the cash flow through either your business account or your personal account and use that to derive an income rather than focusing on what you're showing on your tax returns.